Welcome everyone to the Watchlist, Australia's newest investor-focused webinar series for ASX-listed companies to pitch to real investors and be added to their watch lists. You've no doubt created and curated your own watch list of companies you've invested in and companies you're watching for future investment consideration. For companies, getting on your watch list is a big deal. It means they're being watched and have the chance for you to invest in them and follow their journey. Today, we bring together a range of companies that I know are on your watch list or should be considered to be added. Presenting today are Vulcan Energy Resources, ASX code VUL, Balkan Mining and Minerals, ASX code BMM, CGN Resources, which is eyeing an ASX listing with the proposed ASX ticker code of CGR, and Lithium Universe, ASX code LU7. Each company will present, then management will be on hand to answer any questions you have. So make sure you have your questions ready of management and submit them using the Q&A button at the bottom of your screen. Okay, let's get started. Our first presenter is Alex Handley from the newly listed Lithium Universe, ASX code LU7. Chaired by Australian lithium trailblazer Iggy Tan, Lithium Universe Limited's main objective is to establish itself as a prominent lithium project builder by prioritising swift and successful development of lithium projects in Quebec, Canada. Alex, over to you.
Thanks, David. After a 10-year hiatus, a new lithium company emerges from the galaxy. Introducing Lithium Universe Limited, building a lithium future. If it sounds like Galaxy 2.0, the lithium trailblazer Iggy Tan is back. Iggy started his time back in 1995, having commissioned the lithium carbonate plant with Greenbushes, before moving on to spearhead Galaxy Resources as managing director from a $10 million market cap to about $2.5 billion at merger with Orocobre. Iggy was a trailblazer, a pioneer, and recognised the future of the lithium-ion battery future from an early stage. Iggy was responsible through his time at Galaxy for building the first fully integrated mine-to-refinery project. This project comprised of the Mount Cattlin spodumene project, the Jiangsu lithium carbonate plant, and project generation activities also in Quebec, James Bay, as well as the Sal de Vida brine project in Argentina. Notably, the Mount Cattlin project, now owned and operated by Allkem, is a 1 million tonne per annum mining operation, leading to about 140,000 tonne of spodumene concentrator. This notably, when it was commissioned, the spodumene concentrate price was really only $260 a tonne, now trading upwards of $3,300 a tonne. On the right-hand side, the lithium carbonate plant at Jiangsu, now owned by Tianqi. This, during its day, was the biggest lithium carbonate plant in China, and remains to this day a benchmark for process technology within the country. This is rated at 17,000 tonne per annum, and when it was commissioned, the lithium carbonate price was $6,000 a tonne, now trading upwards of $30,000 a tonne. And this provides a bit of perspective in terms of insight into the real lithium trailblazer in which Iggy Tan was within the early stages of the industry as we know it today. Joining Iggy is Pat Scallon. Pat ran Greenbushes for 25 years, oversaw many major expansions within the operations, and brings a very focused lithium skill set to the group. Why Canada? It's in comparison to Australia, Australia's produced about 300,000 tonne of lithium carbonate equivalent in 2022, and really has cemented itself as a backbone of the Chinese lithium-ion battery chain. In comparison, although the ground is very fertile in Canada, little to no production has really come out of the country within the last 2 decades, with only Sayona Mining coming online this year. What we're seeing is Australian expertise, having embedded lithium experience, now making their way to Canada to explore and develop this next frontier in lithium. And as Mr. Lithium himself, Joe Lowry, says, Canada wants to be the Australia to North America. A few words from our chairman, Iggy Tan. Lithium projects are taking too long to come online, and there's not enough to meet future demand. Investment in Canada has been substantial, yet no lithium has really come out of the country. And finally, there are many lithium explorers, but not many have the expertise to actually execute projects. Introducing the Apollo Lithium Project, which is situated within the James Bay region, about 66 kilometres south of the Trans-Tyger. When this was staked out by our partner, it was staked between two then unknown companies that were really finding its feet within the region, and commanding a very large tenure of 240 square kilometres. We're not here for exploration's sake. We're here to build a project as quick as we can. The project in James Bay, situated next to proximal to hydropower and airport at LG4, was situated both within 30 kilometres of Patriot's Corvette project and Winsome Resources' Adina project. The licence itself is in the same greenstone belt as both of these projects, including Cansett from Winsome Resources, and notably has the same sort of structural conditioning as well as the same sort of host geology as what we're seeing within our peers and neighbours within the area. Now, notably, as you can see here, we use a yardstick in the top right-hand corner. Now, what we're seeing at Patriot, obviously they've just released a 109 million tonne resource, but in terms of intercepts that they have found throughout their discovery phase, we're looking at 156 metres at 2%. And down at Winsome, from surface, 107 metres at 1.34%. So in using the benchmark in the top right-hand corner, these are neither good or excellent discoveries. These are quite outstanding. These intercepts are high grade, thick mineralisation, and notably close to surface. The other main attribute, or what's becoming typical within the region, is that they form these whaleback features or outcrops within the underlying country rock. As you can see here, this is CV5, and notably something else within Allkem at James Bay. The other component on the left-hand side there is the coarse spodumene component, which is becoming prevalent and typical within the region. Now, why do they occur as outcrops? What you can see here is Allkem's James Bay deposit as an example. This is a near vertical, steeply dipping stacked lenses, which makes itself amenable to an open pit mining method. So cutting down and on OPEX and on initial CapEx, producing lucrative viability for the project. In terms of Apollo, what we know, there's 17 known pegmatite outcrops on the licence from the government data set. We'll be looking to get boots on ground and ground truth these pegmatite outcrops as soon as possible. From a coarse spodumene perspective, as I said, the Cansett, the James Bay Allkem, the Corvette, and the Adina project all hold coarse spodumene. Now, the reason why this is so important and the benefits of coarse spodumene are simply down to the simple processing downstream. So it's a 4-stage crushing circuit before leading to a DMS circuit where it's separated from waste and the spodumene. Now, notably, Iggy built Mount Cattlin from a coarse spodumene project, and James Bay Allkem is also coming out with a coarse spodumene design. What we believe is also going to happen at Patriot up on the James Bay and Trans-Tyger region. This is obviously the benefits are reduced initial CapEx and reduced ongoing OPEX. Now, the James Bay region is a hive of activity, as everyone knows, with the recent significant resources being Patriot's 109 million tonne resource, some sort of 6 weeks ago now, and Allkem's resource upgrade of 110 million tonne resource. So these 100 plus million tonne resources now sort of put themselves in the 8th and 9th position of globally significant resources, which puts us in a great neighbourhood. Also, from an investment perspective, Albemarle have come with Patriot after that resource, that maiden resource announcement. But more importantly, we're seeing Rio Tinto now making waves with various joint venture agreements in and around the Apollo Lithium project. So with Midlands and Azimut Exploration. This is the US Dream Team. These obviously made a name for themselves because they're still we're still talking about them today. But we've assembled what we call the Lithium Dream Team, comprising obviously Iggy Tan and Pat Scallon, but notably Dr. Jingwan Liu, who's a international expert for downstream processing. Roger Pova from a plant operation perspective, Terry Stark, who actually was the former GM of operations for Galaxy Resources. We've also got Huyen Yen, who designed and actually constructed the Mount Catlin project for Iggy, and also John Loxton, former Hatch, who actually project managed the Jiangsu lithium carbonate plant build in China. With them, Alex Hanley, myself, Gernot Abel, Exec Director, and Justin Rivers, Head of Geology. We've commenced very preliminary work desktop study-wise, and we've enlisted the help of Core AI, and we're using machine learning from regional projects like Corvette and Adina to really hone in on those specific features that they're seeing within the outcropping nature of those main discoveries. So we've prioritised about 28 targets at the moment, so we'll be getting boots on ground to really understand what they look like, and then going through a sort of a prioritisation schedule before hoping to drill as soon as we can in the coming months. The company comprises a suite of projects across Australia and Canada. The Voyager Rare Earth project in Tasmania, which is right next door to AVX Resources, which has a 27 million tonne rare earth project, as well as the Lefroy Lithium project in WA, proximal to Bald Hill and Mount Marion. The other project we have in the suite is in Ontario. It's the Margot Lake project, and it's situated just right next door to the PAC and Spark deposit run by TSX-listed Frontier Lithium. But all focus for us is the Apollo Lithium project, which is obviously within a very prospective region, nestled in between two major lithium discoveries of the last 12 months. And we've obviously comprised and built a dream team that runs unparalleled within this junior space. So please join us on our mission to the universe.
Thanks, Alex. Great presentation and obviously a cracking listing. Question, do you start with the team or the project? What came first?
The project came first, and the team was built around it. We attracted Iggy back to the industry based on the prospectivity of the Apollo license in particular, and from there we built out the team to really sort of understand, or really, I suppose, obtain the necessary skill sets to actually build a project. And I think that's one of the main points of differences, David, is that we're looking at the opportunity to really utilise and leverage not only Iggy's prolific skill set, but also the skill set of the dream team themselves.
And in terms of the projects, particularly your key project there in Quebec, how did you get it? How hard was it to acquire, and the work that had to go into acquiring it and then developing the plan from there? Because as you say, you are in a very hot neighbourhood.
Yeah, that's right. So our partner, who still retains a 20% interest in the project and is a large shareholder of Lithium Universe, he pegged this ground really within the early stages of the James Bay boom. He was looking for a prospective ground within James Bay, proximal to recent discoveries. He enlisted the help of a pegmatite expert, Dr. Julie Selway, out of Ontario, to really sort of hone in and find this land package. He was, I suppose, one of the first movers, having sort of started that process back in January 2022, when things really, before things really started heating up there. Since then, obviously, David, we've gone through a recompliance, and the previous company, which was Mogul Games Group, is now acquired the projects themselves, and we've now sort of transformed ourselves into a mineral exploration and junior mining company.
And in terms of exploration activities, do you have a timeline on drilling or other exploration activities that those watching should be focused on?
Yeah, we're getting boots on ground, and we're going through a methodical process of really firstly understanding where to hit first. As you can understand, David, the magnitude of the license being 240 square kilometres, it's quite large. So we're deploying boots on ground at the moment, and we'll be really assessing the prospectivity first. From a drill definition and targeting perspective. In terms of drilling, we're hoping to be drilling by the end of the year.
Now, you did touch from a permitting point of view in regards to the critical minerals strategy. You did mention it and how it could provide exploration funding. What's the government doing as part of this?
Yeah, it's quite interesting, David. The critical minerals strategy, which was released in December 2022, it not only sort of alluded to the fact of exploration investment, but also streamlining of the regulatory processes and permitting processes, which is, I suppose, more important for us in terms of getting a project across the line quicker. Now, what they seem to be doing, and what I've heard from the ground, is that they're actually embedding let's say, delegates within the government, bolstering the team to actually help streamline the permitting process, both from a mining processing environmental perspective. So it's actually quite a proactive approach, not only from a funding or investment perspective, but also building out the systems internally within the Quebec and the provincial governments.
And in terms of First Nations, what's your contact been like with those groups? I understand Cree Nation is probably your First Nation body there. What's the contact been like?
Yeah, that's right. The Cree. Yep, we've had very preliminary discussions with the Cree. The Apollo license itself is on Mistissini ground, which is actually south of the license, which is near Shibagamu and Saguenay. These Cree Nation, we've communicated with them on our intentions with the license, and we've been liaising with the Cree Minerals Board also, who really support us and really helped us first engage and start that communication process. So early engagement is the best, as you can understand, David, and yeah, we're doing all the right things, and I hope we get to go there and shake hands with them very soon.
Final question, a good question. Is the business model based around acquisitions and JVs in order to drive momentum before you start drilling?
At this stage, David, we're along with our prospectus, we're a mineral exploration company. We are, I suppose, we've got a huge network. We've got a dream team which has experience within Quebec, but also extended network that could potentially provide project generation. Not only project generation opportunities, but also opportunities of early production, whether that be utilising the Lithium Universe Stream Team in some sort of extended capacity. So we're assessing everything. We're dynamic, we're agile, we're a new company, and we're hungry to really help the Canadian Quebec province to really make a mark on the lithium industry globally.
Well, having worked with Iggy in the past, you've definitely got someone who works hard and looks well outside the box to look for results for shareholders. So, as you say, a dream team, Lithium Universe, company to watch, newly listed, exciting times ahead. Alex, thanks for the presentation.
Thanks, David. Cheers.
I would now like to introduce Stan Wholley from CGN Resources, which, as I said in the intro, is proposing to list on the ASX with a ticker code CGR. CGN Resources is a dedicated exploration company targeting discovery of copper, nickel, and specialty metals in the West Arunta region. Its mission is to deliver value to shareholders through disciplined and sustainable exploration leading to a major discovery. Now, Stan, over to you. I'll just get you to turn on your...
How's that? Can you hear me?
We've definitely got sound. And if you just accept the, yep, there we go. Got you, no problems at all.
Right.
Thanks, Stan. Over to you.
No problems. Thank you, David, and thanks to Market One for the opportunity to talk about our exciting new listing of CGN Resources. We think we're in a fantastic location to make a copper, nickel, or critical metal discovery, and we lodged our prospectus last week, so we're anticipating opening that prospectus any day now. If you could go to the next slide, please. That's just our disclaimers. Yeah, look, I guess in terms of investment highlights, we've got a fantastic 950 square kilometre package right in the heart of the West Arunta origin. And as you can see from that picture, we've got some great neighbours. Other people also think it's a great idea to do exploration. We've got Rio Tinto to our west, who's committed $50 million. WA1, if you've been following their story, have made a major discovery of niobium in a carbonatite, and Encounter have as well, and they've been highly rewarded for it. We've been out there exploring as a private exploration company for 10 years. So we've already spent $6 million on the ground, which gives us a great database of drilling, geophysical surveys, airborne and ground-based, and that's allowed us to produce 6 what we call our high priority targets, 4 for IOCG, 1 for nickel and 1 for rare earths. And we're looking to kick off our drilling to align with our listing in late September, early October. The IPO itself, we've got a minimum raise of 8 million with a maximum of 10. We've had strong interest, which is fantastic, and we think we'll be closer to the 10 than the 8, which is great news. It gives us a really good war chest to go and do high quality exploration for the next couple of years. As I said, we're looking to list probably early October, and we'll kick off drilling 2 of our IOCG targets, Tantor and Surus, when we list. Next slide, please. This is just a quick snapshot of where we're at today. So we're a private company. We've been doing exploration for 10 years. We've got 60 million shares currently in the book. We're looking to raise 8 at a minimum at 20 cents, which will take us to 100 million shares and a market cap of 20, which we think is a really nice, tight, small structure. Our shareholders have been a curated list of mostly high net worths, and then also management that are all investors in the resource business and are keen to stay with us through this journey. Our board is highly experienced. Daryl, our chairman, has been a company director of multiple ASX listed companies and is a very experienced metallurgist. I'm a geologist by background and have been heavily involved in consulting and strategic advice to boards over the last 30 years, really. Grant Mooney, a multiple director of ASX listed companies and a highly experienced company secretary. So we've got a good mix of technical, corporate and governance there. And our advisors on the sort of technical geology side, Dr. Mark Allen, an expert in IOCG and copper in general, and Tom Redcliffe, who was the guy that kicked off this project, looking for diamonds originally, but a highly experienced geologist, and brings all of those stakeholder relationships through our process. Next slide, please. This is just a bit of a demonstration of sort of what it was like 5 years ago when we were out there. We were an early mover. It was good geoscience that took us there. We recognised the potential for this region to host a really diverse set of possible opportunities, and it allowed us to peg this really substantial ground holding. 5 years ago, very little interest. You move forward to today with a little bit of discovery and some money to go and look, and all of a sudden that entire West Arunta region there is blocked out with high quality explorers. And we think we're in the most prospective part of the West Arunta. We sit right against the Central Australian suture, and there's a major crustal features that run right through our tenement, as well as a number of intrusives. Next slide, please. It's not just us that think it's a really amazing place to be doing exploration. Geoscience Australia, GSWA have done quite a lot of research here from sort of 2015 through to 2018 and highlighted this area, the West Arunta, as highly prospective for IOCG and nickel, magmatic nickel type projects. In fact, the whole Arunta has been sort of flagged as that, and that's why people like IGO and Rio Tinto have taken major land holdings. We've got, as I said, like our neighbours are strong. We've got good ground. We think it's ripe for discovery, and there's a lot of money that has been going to be poured into here. Rio's committed 50 million. WA1's raised 30 and is spending it as we speak. ENR have raised quite a bit and are also doing great work. Next slide, please. This is just a quick snapshot of the 6 targets that we'll be looking to explore over the next 2 years. Tantor, Souris, Snorky and Horton are IOCG targets. Shep is a nickel target and Hathi is a rare earths target. If we could just go to the next slide, I'll run through a bit more detail on each of those. So Tantor is what I would call a classical IOCG target. It's a mag high with a gravity high nestled up in against it. It is really similar in its setup to one of the other great IOCGs in Australia, Prominent Hill. The scale is similar. The way that the mag and the gravity sit together is very similar. There's that sort of dark blue you can see in the left-hand picture is a major crustal scale fault. So it sits up against that. And that is really all of the pieces of architecture you want to see for a IOCG target. And so we'll be looking to drill this as our first target. We've got some EIS funding to support that. And we will plunge a 600-metre deep diamond hole right into the heart of that gravity anomaly as our first project, which is, you know, a little ballsy, but we're very excited to be doing it. Next slide, please. Souris, in many ways, is similar to Tantor. It's a regionally significant gravity anomaly. It sits right up against, again, another major crustal feature, possibly the biggest one that runs through our property, a splay off the Central Australian suture. So it's very close to a triple point junction. Again, we sought and received EIS funding to go and drill this. You can see the modelling above has it as a very deep-rooted system. We've got a 700-metre hole on that image. We're actually only going to drill 600 metres, well, unless we find something, and then we'll just keep going. But so this will be the other target that we drill in October, just post-listing. Next slide, please. Shep is a really interesting target. It's based on a geochem intercept from a hole that was put in the wrong spot targeting a kimberlite. Fortunately, or unfortunately, however you want to look at it, it actually hit a 30-metre zone of highly anomalous nickel above 0.5%, and a couple of metres in there are above 1%. As well as the nickel, it's highly anomalous in chromium, cobalt, vanadium, copper. It's got a sulfur kick. And so and it also overlies this really interesting sill-like magnetic feature. So this is a high priority target, but we won't get to this one until we kick off our big programs next year. And we're really excited to go and test both those. The green dots you can see there are ones we have permitted, and then we're seeking permitting to go and drill the other ones. Next slide, please. Our Hathi target is a rare earth target, again, a geochemical and geophysical target. It was a kimberlite targeted hole, and you can see 3 holes there, 44, 45 and 46. 45, the hole of interest, hit a 37-metre zone at 0.38 total rare earths, which is highly anomalous and really unusual for a kimberlite. The 2 kimberlites either side of it had some, but this is literally 10 times higher in its anomalism than the surrounding kimberlites. It also sits up against this interesting dike-like feature, which looks like it comes off a much larger intrusive feature, which is that purple feature you can see there. So we're going to come in, test along the strike of that dike-like feature, and then also hit those X and Y targets, which are large. It's the highest magnetic component, and it also comes closer to surface there. So this will also be part of our next year's programs. Next target, next slide, please. Snorky and Horton are regionally significant gravity anomalies nestled between two large regional scale faults which share that same northwest, southwest, northeast trend, which is consistent through our project. They also have some anomalous drill holes nearby. The nearest one is that red dot you can see just north of Grav G, which is our Snorky target. And it has sort of plus 1,000 ppm copper and cobalt. And there's a couple of holes a little bit further away that get up to 0.25% copper and several thousand% cobalt. So we see mineralization in the drill holes in this region. So these are sort of high priority targets for our next year as well. They'll get sort of first pass drilling. Next target, next slide, please. Look, we've been, although we've been a company exploring for 10 years, our IPO process has been very compressed. We see an opportunity to sort of leverage off the success of our neighbours to some extent, but we think our targets are possibly better than what they listed with. We've managed to keep to a really tight budget, a really tight timeline, which has allowed us to put our prospectus in last week as we had planned. That should open this week. We get drilling at the end of the month and we list in early October. The future-looking programs are all designed, are mostly permitted, and so we're ready to go for next year's series of programs. Next slide, please. Sort of, I guess, as a snapshot of investment summary, we've got an amazing 950 square metre, a square kilometre package right in the heart of one of the hottest districts for exploration right now. We've got amazing targets that are based on good geoscience and high quality data sets. The previous work that we've done there gives us this great database, but also allows us, when we get new data, to bring into our database and really refine those targets quickly or establish new ones. There is probably another 10 targets that sit below our high priority targets that we're really interested to get more data on. We've got a high quality team. It's quite lean at the moment, but everyone in it is high quality and highly experienced in the job they need to do. We've got great relationships with the local traditional owners, the Jamajama people. We were the first company to sign an agreement with them back in 2013. So we've been working with them for 10 years and have great relationships there, which allows us to be very dynamic when it comes to permitting things. Our upcoming drilling program is super exciting. That's 2 deep, really interesting targets that we're really hopeful will generate a great deal of interest not long after we list. At the valuation of $20 million market cap at a 20-cent listing price, when you compare it to our neighbours in this district, seems like exceptional value to me. So get on board if you can, and I'm happy to take any questions.
Thanks, Stan. A great story, great neighbourhood, exciting times ahead. Firstly, the obvious one, how did you manage to get such a strong land package in this tightly held and highly prospective region?
Look, I think it's common in this business, some good geology and some good luck. The guys that started the company, Tom Redcliffe was one of them I mentioned, and Zlad Sass, went out there with a clear idea that this was right for large magmatic systems. They went there targeting diamonds, and although they were successful, really, they discovered Australia's largest kimberlite field, micro diamonds in loam. But they found 280 kimberlites, tested 50 of them. Unfortunately, none of them contained diamonds. But what it did do is it enabled us to get a better understanding of geology. And we were able then to sort of pivot into these larger magmatic systems. And so their good work of getting on the ground early was probably the main reason we've ended up with such a great package. But also keeping it in good standing, as you know, like making sure these things stay live and active. We've managed to roll over the tenure and really create, all our tenure still has long life. So we're really lucky in that respect. And we're sort of lucky that there's been some good discoveries around us. But I would say it was good geoscience that took us there.
And what are your hopes for this upcoming drilling program?
Look, whenever you go into a new exploration greenfield program, when you've done a lot of work, well, me personally, I get very excited, It's a very exciting time to go and, it's like having your first child. You get to go out and gaze upon it and see what's there. These are big targets. I'd like to see that we have, a 400-metre intercept above 1% copper, but your first drill hole into a major magmatic target is not likely to deliver that. What I would like to see is a proof of concept, the evidence of a large magmatic system that might be, large hematitic alteration, magnetite alteration, some evidence of base metals. That to me would be an exceptional start to then be able to go back next year with a big program and really test these things in detail.
And it is a big package of ground. You've touched on a number of targets that you will be focusing on. Are there additional targets that are sort of the next here or the next ones in the pipe?
Yeah, certainly. So we've really concentrated. We went there with the idea of looking for large magmatic systems. So we've done our targeting around that. And the 6 targets we've got are high quality and well researched, and I think really relevant targets. Outside of that, there's probably another 10 what I would call intrusive targets that just require more work. We need to get some gravity over them. We would like to refine them a little bit before we, commit to drilling. So we've got a number of next stage geophysical programs that we'll be doing next year to give us a better data set, especially along the southern corridor, right up against the Central Australian suture. That area in particular has some really amazing looking geophysical features, which are definitely intrusive related. So we just need to do a little bit more work on those before we commit to them.
Well, as you say, a big land package, exciting neighbourhood, a lot to be done, and much to follow with the company moving forward. Really look forward to following the listing or the proposed listing and how that rolls out. For anyone looking to take up an investment opportunity there, obviously CGN Resources website would be the place to go over the coming week to subscribe initially, and then also when the prospectus goes live, that'll be the place to find.
Just sorry to interrupt. The prospectus is already on the website, so if you have any interest, go and download the prospectus. And like I said, we're hoping to open anytime soon. So thanks very much for the opportunity, David.
Perfect. Thanks, Stan. We follow with interest.
Cheers.
Now I'd like to introduce Dr. Francis Wedin from Vulcan Energy, ASX code VUL. Founded in 2018, Vulcan's unique zero-carbon lithium project aims to decarbonise lithium production through developing the world's first net carbon neutral lithium business with the co-production of renewable geothermal energy on a mass scale. Francis, look forward to hearing more about it. Over to you.
Thanks, David. Thanks for having me on, and thanks to everyone for your time today. I'll just share my screen. Hopefully you can see that. Right. There's a disclaimer at the beginning of this presentation, which I'll take as read. This is on our website. Thanks everyone for your time today. In a nutshell, Vulcan is 2 things rolled into one. So we are a producing renewable energy company. So we have a commercial geothermal renewable energy plant, which is on your screens, in southwest Germany, in the Upper Rhine Valley, bordering France. But we're also building a lithium business, and this will take over as the main business in the years to come, and will far outstrip the renewables business in terms of revenue. In doing so, in building an integrated lithium and renewable energy project, what we're doing is we're building the world's first zero carbon lithium business. So producing lithium with a net zero carbon footprint, and then a co-product or a byproduct of geothermal renewable energy as well. In doing so, we plan to produce renewable heat for more than 1 million people by 2030. We're mostly producing renewable power at the moment. We're increasingly ramping up the renewable heating side of the business. And we're aiming to produce enough lithium hydroxide for around about 1 million electric vehicles per annum, obviously depending on battery chemistry. That represents the first 2 phases of our production, which would be around 50,000 tonnes per annum lithium hydroxide. In doing so, and this is a key differentiator, we aim to avoid about 1 million tonnes of CO2 emissions per annum. So a really significant decarbonising effect once the project is up and running. The project looks a bit like this. It is not a mine, that's the first thing to say. So it looks actually a lot like an integrated oil and gas project, just minus the oil and gas. So we've got your well sites in the upstream, which are producing hot lithium-rich brine from between 2 and 4 kilometers depth in the upper Rhine Graben. So we're producing brine already. We have producing wells already into this system. And that then gets pumped to a renewable energy plant where you produce heat and power. And this is baseload renewable energy. So it really is the holy grail of renewable energy at the moment. You then sell that power and heat into the grid. On the power side, we get a nice feed-in tariff. On the heat side, you typically have an offtake agreement with the local consumer. And then what normally happens is the brine gets re-injected back into the reservoir and then gets heated up again. But what we do this time is we pass it through what we call our lithium extraction plant, or LEP. And there we pass the brine through a series of columns, and we use a technique which has been used in the industry commercially since 1996, called adsorption type direct lithium extraction. So the brine touches a series of columns where the brine comes into contact with some aluminate-based adsorbent resin. And the resin basically takes the lithium chloride out of the brine and leaves everything else in. The brine then gets re-injected minus the lithium. The lithium then gets washed off using a water strip. So it's a very low reagents process. The loading is driven by the heat and the salinity, and the unloading is driven by water. So once again, the lithium is following the salinity gradient. Commercial producers who use this technique use gas to heat up the brine. We don't use gas. Our key differentiator is our waste brine off the geothermal plant is still warm. It's about 60 degrees after the energy generation process. And that's the perfect temperature to run the lithium extraction. So that's our unique differentiator. Our heat comes from a renewable source, not a fossil fuel source. Then we produce a lithium chloride concentrate, about a 40% lithium chloride concentrate, which gets transported to the last step of the process, where we have our what we call our central lithium plant, which produces lithium hydroxide. And that uses electrolysis using commercially available chlor-alkali cells. It's a process that's been used for over 100 years in the chlor-alkali industry, and the only difference is we're employing lithium chloride instead of sodium chloride to drive the process. But it's a very well understood, very well-known process. Throughout this whole process, we produce more renewable energy than we consume. So it's a net negative actually process, because we're decarbonizing the grid with the excess energy that we sell. It's a net carbon negative process. But for simplicity's sake, we call it the zero carbon lithium project. And that's the unique differentiator for us. It's been a bit of a journey to get to this point. So we were founded in 2018 as a startup. My background is I was previously in hard rock lithium, and I was involved in developing some assets in the Pilbara, which became part of the Pilbara Minerals project and is now in production, supplying the Asian market. So Vulcan was really my lithium 2.0, and I started it with a chap called Dr. Horst Freuter, who's a geothermal expert, because we're focused on developing these geothermal brines. And really, we started with the goal of zero carbon lithium, working backwards from there. How do we develop this? Over the journey, we've built a lot of in-house lithium extraction expertise, particularly this type of lithium extraction. And we've acquired 4 German companies along the journey as well, 2 engineering companies, 1 drilling contract labor company, and 1 producing renewable energy company as well. We've raised about 500 million Australian over the journey as well, including investments by Hancock Prospecting, and also from Stellantis, which is the world's 5th largest automaker, includes brands such as Peugeot, Citroën, Opel, Fiat, Chrysler, Jeep, etc. So Stellantis is our 2nd largest shareholder, and we have 5 binding lithium hydroxide agreements signed with Stellantis, but also with Volkswagen, Renault, Umicore, and LG. So we've sold out the first 5 years of production. We've gone through scoping study, EFS and DFS. Now we're in our bridging study phase. So we're aiming to get to a class 2 estimate, And we're basically going into that execution phase of the project. We've got about 240 million Aussie cash, which we're deploying towards execution. We need to raise a lot more, to be clear, to build this project, but we are deploying our cash towards preparatory CapEx work. So we're already getting into that execution mode. The rubber is hitting the road. I won't go into detail on this, just in the interest of time, but Europe needs a lot of lithium and it needs it very quickly. It's the fastest growing lithium market in the world. It has zero supply. And the Europeans also want their battery raw materials to be low carbon or net zero carbon. And that's driven by the customer demands. And Europe needs a lot of renewable energy as well. Trying to get off Russian gas has been difficult. There is a supply shortage of renewable power and renewable heat in Europe. And there is a very strong focus on developing geothermal projects in Germany for that reason. So Europe is backing both critical raw materials production, lithium is at the top of the list, and renewable energy production and development in Europe. And this is causing a lot of regulatory tailwinds. And also now, finally, it's taken a while, funding mechanisms as well compete with the IRA as well. And this is largely coming through the member states. So France and Germany in particular will be funding their own projects, and we intend to be part of that. So a lot of regulatory and hopefully government financing tailwinds behind our industry. Just to zoom into our project, so it looks a bit like this. There's essentially there's an upstream and there's a downstream. There's a central collection point for the brine. You can see two of these geothermal plants already exist. We're operating these. We're building a large one in the center of our phase 1 area. And these will be fed by multiple well sites, including some of the ones that exist already. We're basically going to expand the existing brine production, and therefore expands the geothermal energy production and then the lithium production as well. And then on the downstream side, we will be located at a chemical park called Frankfurt Höchst. So we're building a chemical plant within a chemical park. So that makes it a lot easier. This is what it looks like with a bird's eye view. So we're in southwest Germany, remember, so bordering northeast France. We're in the Bunter Sandstone reservoir. This has been producing geothermal brine for many years. A lot of data stretching back many years, so the brine is very well understood. We are producing from the core of the fields here at our Insheim plant and the Landau plant nearby. We're expanding production from this area, and we'll be transporting the lithium chloride upstream downstream rather, to the central lithium plant at Frankfurt Höchst. The bigger picture, though, is that we are the largest license holder in the Upper Rhine-Graben. So once we've executed phase 1, and we're focused on doing that really efficiently and really well, we aim to print and repeat. So phase 1 is about 24,000 tons per annum of lithium hydroxide production at 30 megawatts power, 30 megawatts heat. We aim to print and repeat beyond that, phase 2, phase 3, etc. And we have room in our chemical plant to do so. It's basically adding more and more trains of production in the upstream and the downstream. So there's quite a modular effect there. The important point is we're not resource constrained. The resource that we've defined so far is very, very large. It's one of the largest in the world. It's certainly the largest in Europe. 26 million tons of contained lithium carbonate equivalent. So this is a really large brine resource in the center of Europe, very close to end user customers such as Stellantis and Volkswagen, Umicore as well. So we are already expanding into France. The French are moving very quickly in this space as well. The resource doesn't stop at the border. So we've got some license applications, one of which is together with Stellantis actually. And we're also pushing mostly to the north of where we are on the German side as well. Wherever we build more lithium production, we can also build more renewable energy production as well. And there is no shortage of renewable heating supply, renewable heating demand, I should say. We have our own in-house drilling company, essentially onshore oil and gas rigs. They are electric, so we can keep our footprint net zero carbon. And we have our own in-house drilling crews as well. This is important because drilling drill rigs are in short supply in Germany, and everyone's rushing to develop geothermal projects in the area. So we have 2 out of about 12 rigs are available in the country. We have a very long life sustainable resource. So we've modeled phase 1 area over 30 years, and we see a very stable, steady decline of the lithium grades over time. And up to 30 years, we're still well above our cost grade. So this is a long life, multi-decade asset. When we finish producing lithium someday and we're recycling all the lithium, what we leave behind is not a mine, it's a renewable energy asset. So there's a nice sort of circular story there. Our mine looks like this. It's a renewable energy plant. It's the size of a small supermarket. And basically, we're going to be building more of these. You can see that we're surrounded by gardens, by vineyards, by fields. So this is what we think lithium production in Europe can look like, and indeed elsewhere in the world as well, where we can apply this technology. We are building a couple of things. So we're commissioning our lithium extraction optimization plant. This is basically like a commercial demo, and this will serve as a product qualification and training facility over the next couple of years whilst we build a full phase 1 lithium extraction plant. So commissioning of this plant will be completed in the next couple of months, and it will start producing the first tons of lithium chemicals ever domestically produced in Europe. We're using a process which is very efficient. I won't go into details in the interest of time. And for that reason, it is increasingly used in the lithium industry. And indeed, we see a wave of new lithium projects coming on stream, mainly from mining companies at the moment. Livent, Rio Tinto, Eramet are also building adsorption type DLE projects. But interestingly, the next wave we see after this is coming from the oil and gas sector, because they can deploy the skills and the personnel and the equipment they already have to increase lithium from brine production at a much larger scale. It's sustainable, they can decarbonize their operations, and they can redeploy their gear and personnel. So ExxonMobil, Oxy, SLB, a lot of big players are entering the space, which makes it exciting. Once again, our only key differentiator from the existing producers using this technology, renewable heat, not heat from gas. We've had 3 years of laboratory test work and piloting. We built our own pilot plants. We have our own Vulcan labs in Germany. We've developed our own sorbents, because the sorbents that you can buy on the markets are all produced in China and Russia. So we produce ours in France. We call it Vulsorb. It is in-house intellectual property, but it's based off a commercially proven technology. It was actually invented in the 70s, absorption type DLE, so very well understood. For alkali, as we said, we're building a chemical plant within the chemical park. We have secured our site for this, and once again, there will be an optimization plant which will serve as a product qualification and training facility as well, whilst the commercial plant gets built. So we have our site secured, and we're ready to go. And we've built our execution team. We've got about 320 personnel now in-house at Balkan. So the team is big, they are very motivated, and we've got some fantastic people from the oil and gas, geothermal, and lithium industries, and really ready to go into execution mode. So once again, the rubber is hitting the road. We will have a material decarbonizing effect on the industry. The lithium industry is pretty carbon intensive at the moment, and we intend to produce essentially the lowest carbon lithium in the world for electric vehicles, but also with low water footprint and small land footprint as well. So it is engineered to have very high environmental performance, and this should affect our bottom line as well. So we should see cheaper borrowing, lower cost of capital, because we are classified by many as a green project. Local community support, very important. The byproduct that we produce is renewable district heating. So a lot of support comes from that. And we have a very strong focus on community works as a result. On the financing side, we should have a very low operating cost. We have favorable offtake agreements fixed, and this is important in a volatile lithium pricing environment. But because we have that low operating cost, we're very well insulated from any ups and downs in the lithium market in the years to come. But we see an enormous demand for our offtakers for more product if we can produce it. This gives us very healthy financial metrics. So just from phase 1, 2.6 billion euro post-tax NPV, 26% post-tax IRR, and that's including the whole integrated project, so renewable energy, lithium extraction, and lithium refining. This gives us a capex of about 1.5 billion euro. We have very low OPEX. I'd say our capex is sort of, it's in the middle, remembering that we're also building the renewable energy part of the business as well. We've engaged BNP Paribas on the financing. We've had a very successful market signing exercise for that financing, and we will officially kick off debt and equity financing in November, aiming to raise the equity side at project level. And that's where the interest of the oil and gas guys comes in, because we've been receiving a lot of interest there. So we'll start to hopefully see some movement on there. and firm up that interest. So just to finish off, I know we're time, but just to cover off on the main points, we are the world's first and only zero carbon lithium company. We're moving into the execution phase now. We're well funded. We have some very supportive and deep-pocketed substantial investors in the company. We have very strong off-takers. We have a fantastic team. We have the largest lithium resource in Europe. We have in-house lithium extraction IP optimization plants will be up and running in the next few weeks and months, producing the first tons of lithium product in Europe. And we're moving into building Europe's largest and hopefully the world's most sustainable lithium project. So very excited about the weeks and months to come.
Thanks, Francis. A great presentation, and clearly Vulcan, a company that many have watched over a long period of time, and it continues to kick goals for investors. A large number of questions have come through, so we'll get straight to it. Situation in Europe, what is it like? You're on the ground, and your team are on the ground. What's it like? People, I think, expected it to move or react quicker than to what happened in the US, but they don't sort of understand the EU is a member state and it has to go through a process. But what is the situation like, and what does government support potentially look like?
So the EU is a very slow-moving organisation. There's no getting around that. They've got to deal with the member states pulling in lots of different directions. They can't move as quickly as the US, as a simple fact. So they have been knocked a bit by the IRA in the battery sector, renewable sectors, because the US has moved much quicker. But they are now responding, and what they've done is quite smart. So they're freeing up the member states to fund their own projects. So usually they can't do that because of anti-competition law in the EU. In this special case, they've used existing pots of funds, which don't need to be reapproved, that were approved as part of the Ukraine crisis and COVID, and said, Germany, France, whoever else, you go ahead, you use these existing pots of funds. It's called a Temporary Crisis and Transition Framework, or TCTF. And there's significant funding available under this to fund critical raw materials projects like ours. There's also similar schemes on the renewable energy side as well. So the best thing they could do is just free up the member states to go and fund their own projects. If you're in Eastern Europe, that's not so great because there's less funding to go around. If you're in Germany and France, as we are, fortunately, that's quite a good position to be in because they're obviously well-financed states.
And from a permitting point of view, from a financing point of view, are there other opportunities?
Yeah, so there's this strategic project status, which we'll be applying for, which essentially should further speed up permitting. But honestly, our permitting is going pretty well at the moment. We've got really good engagement with the authorities. I'd say we're pretty much uniformly backed by all sides of the political spectrum in Europe. Everybody wants this. It contributes to the auto industry, which is the biggest industry in Germany. It's national critical raw material security, and they are very alive to that now. So, I mean, last time I went over to Germany, we saw federal ministers in Germany. We had the honor to sort of sit down with some of the main decision makers in the space. So they are taking what we're doing very seriously, and I hope, I can't promise, but I hope that that's going to translate into significant funding assistance as well, which should help us with this financing process. But let's see. We won't rely on that, but we're certainly hoping for some assistance.
And with anything of this nature, there are risks. What are the key risks, and how are you looking to deal with those? So we see it, our technical and execution focused executives who come from the chemicals industry, the oil and gas industry, the lithium industry, they really see the main risk here as execution risks, not technical risks. So we're very comfortable with the technology, the technical side of things. Now it's all about making sure that we smoothly and efficiently execute. And that's where the expertise of these, particularly the oil and gas guys, comes in, because they're used to an integrated project and the interface management, fitting all the different parts of the project together. So it's that project execution mentality which we're getting into. And we've got some great guys who joined us in the last few months, including the CEO, Chris Marino, who replaced me as CEO. I've moved to the chair role. And that really reflects moving into execution mode. So execution risk, but I think we've got some really good people to push that forwards. There's a good question here in regards to DLE and how that's changing the industry. How do you see it changing the industry, and what are some other trends that investors should be looking out for?
So I think I see it as hard rock was nearly 10 years ago. You know, hard rock was a really tough sell in 2014, 2015. I was pitching it to investors and it was seen as too high cost. Everyone said that the brines were just going to blow them out of the water. And we all know what happened next. DLE, I mean, it's been around since 96, but now we're seeing rapidly increasing adoption and building of these projects. They have the ability to produce at much lower cost and with a much lower CO2 footprint as well. So I think, I mean, we still need hard rock. It's not a zero-sum game, but I think you're going to see a much bigger wave of supply come in, backed by mining guys and the oil and gas guys. The key thing to watch out for, not all DLE is the same. So it's a catch-all term. That's why we say adsorption type DLE. Look out for companies that are doing adsorption type DLE, because that's the commercially proven method. And look out for companies. Obviously, I'm talking up my own book here, but it's easy to sort of say you're going to buy from a technology supplier, but then, as we've seen, typically these companies give away a slice of their project as a result. Look out for companies like Aramet, like Livent, like ourselves, who've built up their own in-house teams who know how to make and operate these ordnance. I think that's really important as well.
Final question, key catalysts. What should investors and those watching today be focused on over the coming months?
So look out for us commissioning and bringing into operation the lithium extraction optimization plant, producing the first tons of material ever produced in Europe. That will be, hopefully, it will be a major proof point for investors. We've done this at pilot scale. Now we're going to do it at a much larger scale. So I think that will be a really good psychological point for financiers, for investors, for strategics watching us. That will happen over the next couple of months. So it's an exciting point. And then look out for our financing process. I think you'd be surprised at the interest that we're getting around that and where that interest is coming from. I think once we see the blocks sort of falling into place on the financing, I think that will be really one of the final risks of the projects taken away as well. Look out for updates on execution, remaining permits coming in, and the builds starting to happen all the time. All of those, I think, are very important catalysts and proof points to de-risk the project. So a lot's going to happen over the next few weeks and months, and watch this space.
As you say, it's been very busy over the last few years, and it's going to be busy still, which investors like to see. They like to see news flow and they like to see activity. So Vulcan, a company to watch. We look forward to watching with interest. Francis, thanks for your time.
Thanks so much, David. Thanks for having me on. Thanks everyone for your time. Cheers.
As I said in my introduction, the purpose of this webinar series is to give you the opportunity to engage directly with companies that are on your watch list and to give you ideas of companies you might want to potentially add to your watch list so you can follow them in the future and maybe invest. So look at your watch list. Let us know if there are any companies on there that you want to hear from, or let us know about companies you've been thinking about adding to your watch list, and we'll get them on to present in the near future. Thank you to the presenters for making your time available, and also to you for watching. We'll see you again in a few weeks' time. Have a great day.